Hey there everyone, welcome back to the Indus YouTube channel, and in this video we're going to discuss about why to learn market profile and is it worth to learn market profile and add to our trading setup. So we're going to discuss these 2 points in this entire video. So without wasting much time, let's get started. Yes guys, in order to answer why to learn market profile, there are a lot of points I need to discuss, but let's start with the basic point why we need the transformation from the present setup to the market profile. In order to illustrate this, I need to take you to the charts. We are on the charts now. In order to illustrate, I have taken three different type of chart types. And if you see, earlier we used to use line, thereafter we shifted to bar, and thereafter we shifted to candlestick charts. So now let's understand what is the reasons, what might be the possible reasons while this transformation of this sort of charts, in order to understand why to shift to market profile. So the first chart is line chart, and you can clearly see this line chart clearly shows the limitation in the sense of the data, limitation in the sense of presentation. See, line chart is nothing but it will join two reference points. Now the reference points, you can take only one point as a reference point, either high, low, open or close, right? Only one point, which is when there is limited data, you have limited to analyze. That's the reason we have made transformation from line chart to the bar chart. Now in the bar chart, what are the things we can get? Compared to the line chart, bar chart is providing more information like open, high, low and close. You can clearly see this, and along with that it also gives you the color coding as well. You can clearly see this. Now what is the main advantage of Japanese candlestick? You can see here both provide the same information. Both this bar chart as well as Japanese candlestick chart provides the same information, but what is the difference? Majority of people like to see the candlestick. The reason is visualization. You can see in the candlestick chart we see the body colored and it is very easy to recognize, and that's the reason. In simple words, if you see in simple terminology, it's like UI, user interface, right, or user experience. If you see, it is little bit difficult to analyze in this sort of chart, but it is comparatively easy to analyze in the Japanese candlesticks. So hope till now you understood where there is more information as well as where there is more visuality, in the sense presentation. So that's why we kept on shifting this. And there are also other chart patterns all as well, and lot of people use that as well, but majority of people, the transformation happened between only this type of chart types. So that's the reason I have taken these three chart types. And now the question is why we need to shift to market profile. And before seeing that, this particular horizontal axis provides you the time and this vertical axis provides you the price in all these three type of candles, and we're going to discuss that in few minutes. But you can see here, this is 9th Feb chart of line, and this is bar chart, and this is candlestick chart. Just you make sure watch once, and let's switch to the market profile chart now. Yes guys, now this is market profile, the same 9th Feb and 2024, the same chart of Nifty. So now if you see, market profile is represent in this sort of manner, and no need to worry about this, because in the first impression if you are looking confused at this chart, no need to worry. We gonna to start this series from the scratch, and as the videos going forward you will understand it much better. But my intention to bring you on this chart is, I want you to see what are the information we get in the market profile as well. So in order to understand this, you can see this particular chart. In this chart you can see lot of information we are getting. So no need to worry. As I said, if you don't know any of the terms here, that's completely fine. As the series progresses, you will learn one after each. But as of now, you just I will give you a small introduction of all the elements here so that you can understand easily. We let's start from this. VAH is the value area high and VAL is the value area low. And what is POC? POC is point of control. So let me give you a small introduction about these 3 points. Let's understand what is value. Let's say at present the petrol rate is somewhere near to 100. Okay, now what is the value area? Value area is that area where it will not affect buyer or seller. Let's say different regions have different petrol rate, and let's say one state is somewhere trading at 90 and some state is somewhere trading at 100. In between, when the price range of petrol is in between 90 to 100, it will not affect most of the consumers, right? But let's assume the petrol rate is suddenly dropped to 50 or 40, or petrol rate is suddenly rise to somewhere near to 150 or 160. So in this particular example, 90 to 100 is a value, fair value, and whatever 150, 160 as well as 50 and 60 are not fair values, right? Someone is affected at 50 and 60 and someone is affected at 150 and 160. So now here with the market profile, we can identify the value area of that particular day, or rather on particular recent trend. So this is something we can identify using the market profile, which plays a very key role. And as the videos progress, you will understand how to identify it, and you can also identify the importance of that value area. So hope you understood. Now what is this POC? POC is nothing but in the entire day, that is the level where the most of the time market spend. Usually the value area is the fair price, right? But POC is the fairest price. Okay, so this POC we get information. So now coming to what is unfair low and unfair high, in order to understand this, we need to understand the auction process. As I again said, I will illustrate you with a small example of auction process, because as I said in detail we're gonna to discuss in the further videos. Auction process is a key we need to understand in order to understand the market dynamics. So now let's say this is the value area we discussed, right? Let's say opening is below the value area. So now as this is below the value area, now it will look for or auction for the seller. Now it will move higher to attract the seller, and if sellers are not coming, it will move more further, and it will move until you get the last seller exhaust, and thereafter the auction will be again back to looking for the buyers. So this is the auction, and simply this process is followed throughout any type of market. Okay, so this is provided as, simply we call it as supply and demand, right? So that is the auction. So the auction process also we can identify using the market profile. A part of this, we can also understand what is balance, imbalance, and is the today's opening is in the balance or imbalance, and we can identify the value placement, and lot of stuff we can identify simply by looking at this particular chart. And this particular pattern is also called as seldom bell curve. So why we call this? So let's also discuss that. If you see the market profile here, if you just rotate it, don't you feel it will look like this, just as a bell shape, right? So that's the reason we call it as bell curve. So now how this works, this is the important thing. Okay, now let's discuss with a real time example. Okay, now let's say in a classroom a test is conducted to the all the students. Now majority of the students will score in between B and D grade, right? And only few people will be scoring A or F grade. Similarly, the data is represented in this type of distribution. So now it is normal distribution, right? You see the main key is A key of understanding market profile lies in correctly reading this information. That's it. So now you guys tell me, is it worth shifting from candlestick pattern to market profile where this is providing this much of information? And trust me, whatever I have shown is limited. Now there are more things which can unlock once you start learning, right? So this is the first reason I want you guys to shift to the market profile. Now let's see the other reasons as well. So we have seen lot of broad ways to divide the market participants, right? But in this video I want you to categorize by using the size. Size in the sense their fund size or account size, right? Now participants, by using this size we can divide as one with the highest more capital and one with the less capital in simple terminology. And if you read in the books, because this market profile is not a new tool to the market, it's almost came out to the public in 1985, which is released by Stedelmeyers. And if you are okay, I will make a separate video on how it is introduced and who is Stedelmeyers and what are the books we should read. And if you are interested, let me know in the comment section. I will make a separate video for that. But majority of the books, they are divided into other time frame traders and flow traders, because if you see before electronic transactions in the share market, they used to do on the floor, one who have seen in the movies as well, right? And usually the small players used to go and stand on the floor and they used to buy and sell their shares physically, and they used to buy from the broker, right? So these guys are called as floor traders. And there are other type of traders who used to make a call, and they used to say buy this share at this and buy and sell this share at this price. So these guys are categorized as other time frame traders. So in simple words, if you keep things to the present terminology, so simply you understand that flow traders are nothing but retailers like you and me. Okay. And what about other time frame traders? Other time frame traders, you can say them as institutions, you can say them as smart money, you can also say them in the Desi language like operators. So hope you understand. Now in simple terminology, OTF, other time frame traders, you can call as smart money or operator. Now flow traders are called as retailers. Hope you understood. This comparison I am making because this comparison also important in order to understand the market profile. So now let's move even in the other time frame traders, because see, as we know, whether it is smart money or retailers, there will be no persons having the same ideology or same psychology. See, on the same chart, on the same time frame, on the same situation, different people have different opinion and different people have different trading styles, right? How many of you agree this? If you agree, let me know in the comment section. In the similar manner, lot of members want, let's take the Indian indices as example, let's say Nifty 50, like some set of members or some set of groups want Nifty to reach 30,000 mark, and some people also or some group want Nifty to reach 10,000 also. And yes, they have their own logics behind that, they have their own instincts behind that. We are not going to focus on that, but you can see there are broad categories, like one group is buyers and one group is sellers. It depends upon their own logics and their own environment and their own analysis, right? But you understand, it's not like big player in the sense they will all sit on one direction, not like that. See, similarly, like retailers, the big players also have two particular category of people, as I said again, buyers and sellers. So now let's see this particular chart in order to understand the importance. See, the important thing I need to discuss here is about this other time frame players. See, other time frame players are passive traders. So what is the difference between the passive trader and aggressive trader? See, very simple. In detail we going to discuss in the order flow series, but here I want to just give you the introduction. So other time frame traders are nothing but these are the traders. They usually trade with the limit orders and they wait for the price to come to their levels. They will not run back the price. So if the price is coming to their levels, then only they will execute the trade, or else they will sit idle. So simply you understand like this. Now who are retailers? Retailers are someone who provides the liquidity and mostly execute their orders in market orders. Okay, so hope you understood the difference. Now let's see, this is a price axis and this is time axis. Now this green line is 50 rupees and this red line is 100 rupees. So now OTF buyers, this set of people are looking to buy below this 50 rupees mark below, and these are set of group of OTF sellers. They are planning to sell above this particular 100 level mark. So now let's say for some time, let's assume there are no retail traders, then there will be no fluctuation in the price. Why I am saying this? Because in between this other time frame buyers and other time frame sellers, the liquidity is provided by these retail traders like you and me. Because these guys are passive, as we already discussed, they will not execute their orders above this price, buyers, or these sellers will not execute their orders below this price. And yes, there are also some exceptional cases where they also go for aggressive buying or selling. That only happens when they are decided to take the price from balance to imbalance. We're going to also discuss that part as well, but majority of the part, this is the structure where we're going to see limit sellers and limit buyers, or other time frame sellers or other time frame buyers. So this is the clear structure. So now tell me, is it not important to track this smart money or this operator or this other time frame player, what he is doing, whether he is selling or buying, where are other time frame buyers and where are other time frame sellers? Is it important or not? So now let's go back to the same example which we discussed on the charts, right? So now this is, let's consider this is as 1/2 an hour candle. Okay, 30 minutes candle. You see this A as 130 minutes candle, B as 130 minutes candle, C as 130 minutes candle as of now. Why and how I gonna to explain you. Now see, again if you seeing this profile, you can easily say that majority of time spent at these areas, right, and very less time spent at these areas, or else individually you can also see this chart. So can you say this, there is again a quick rejection in the price, means the time spent at these areas is more compared to these areas. Do you agree? So here the price is rejected in the sense we got some limit buying here, OTF buyer present here, and that's the reason we have seen a buying tail here. So all these things we can identify using the market profile. And the POC which we have discussed, the fairest price is at this area which is in the white color. So we're gonna to also discuss everything about this and how to check. By the way, this is this chart, this particular whatever the image you are seeing is from the Quant Tower. And if you have not yet watched the Quant Tower application tour, then make sure you go and watch. Yes, now let's see, we have already discussed about market profile, but let's keep that in points. First point in order to discuss, if you see, you have gone through a lot of indicators if I am not wrong, and many of the indicators are given buy or sell signals. Like let's say even in the RSI, it is cleanly saying that RSI is going to 30, then that is a oversold situation and overbought situation. There are some predetermined rules. But coming to market profile, and especially we don't have any that sort of rules. Okay, and the second important point is majority of the indicators are derived from the price, volume, open interest, and some of them are with the time, right? But majority of these indicators will not work on the sideways market or neutral market. But coming to market profile, you can identify that neutral market using the market profile. So you will not have any restrictions. You can use this market profile in the trendy market, sideways. In fact, you can identify the trendy market and sideways market by using the IB in the first 1 hour itself. So this is the beauty of the tool. And coming to candlestick pattern provides only you 2D print view, but coming to market profile provide you 3D print view. And let's also understand this market profile enforce you to study the market dynamics rather than of giving importance to the price, because as you have seen, the time is neglected in the candlestick pattern. And in our same example, if you see, I have shown you the rejection where the limit buyers have come. And if you observe in the candlestick pattern, the same time is equally distributed to the all the candles, right? Which is not fair, which clearly shows the time is not utilized or used efficiently. Because see, actually the time spent the market on 9th February majorly on these areas, but these areas are rejected. So you no need to worry about that. We're going to understand what is price rejection and price acceptance, and what happens when market spend majority of time, what happens if the market spend less time. We're going to discuss everything in the upcoming videos. Hope you clearly understood, right? Because this is important, you need to understand. The time is not utilized efficiently, and moreover this market profile helps you to understand the market dynamics. And here I need to also share you one point. If you read Jim Dalton sir's book, he clearly mentioned that most of the future traders get failed because they run behind the price. They fail to keep the market context behind the price. That's the reason they fail. And once you start using this market profile, you will learn how to keep the market context or like market dynamics, and you will understand that. And once you understand that, then this market profile going to be incredible tool in your trading setup. Now coming to provides the value area, which we already discussed, and which helps to track big player activity, which we already discussed. And the most important point, the bottom point, which is very necessary, helps you to avoid unnecessary trades. See, we usually see when there are day types, right? When after the basics, so in the next video we're going to start the day types. When you already know this is a normal day, or when you already know this is a non-trendy day, then obviously market profile informs you in the first 1 hour itself. And we can also identify it much earlier once we level up our levels in this market profile. And we can identify when you already know that there's going to be a sideways day, then you avoid unnecessary trades, right? You will not expect or imagine for the trend to come, right, when you already know that. So that's how you can avoid unnecessary trades. That is the magic of market profiles. And this market profile, these are the very limited things I have covered, but this tool is way more bigger than what I have mentioned here. Now coming to for whom this market profile is not for. See, if you are looking for buy or sell indicator, my dear friends, this market profile is not that. This will help you to understand the market dynamics and market context, not it will give you any buy or sell indicators. When you understand the market, you know it much better way to buy and sell. So this buy and sell indicators are only for beginners, which usually and practically not work. So if you are looking for that, then market profile is not for you. And if you are looking for shortcuts to earn money or shortcuts to understand market context, and that is not practically possible, and even that market profile is not for you guys as well. Now coming to one who want to learn and earn in overnight. See, learning something new takes the time, and you need a proper leveling up to in order to understand. And if you are thinking to make it master in one overnight, or in one overnight you are dreaming of earning doubling capital, then this is not the tool that helps you out, and this is not a tool for you as well. Now the one thing which I need to say about the market profile or this particular playlist, and thereafter we will end our video. This point is, market profile is a bigger picture. You understand like this, market profile is a bigger picture, and whatever the topics we gonna to see, if you divide that market profile into this puzzle, and whatever the topics which we are discussing is one piece of that particular puzzle. So every piece plays a very key important role. The reason is everything in this bigger picture is interlinked and integrated. Okay, so if you don't understand this piece and if you are not recognizing this piece, then obviously you will not able to do this piece as well. So this is where the market profile becomes important, and majority of people fails because they will not master first piece and they want to go for the second and third piece. So that is not possible because here everything is interlinked. Like if you are seeing the day types, then only you will understand open types. If you are understanding open types and you don't know about day types, then there is no value in learning the open types when you don't know the day types. And value area placement, you will only understand or you can only use effectively when you know the day types and opening types. And for all this you need to know the basics. So everything is interlinked here. So in order to see the bigger picture, you need to learn and you need to practice and give efficient time in order to master this tool. And once you master this, you will see an immense growth in your trading and you can see the better market understanding. So in order to do that, I want you guys to support me. I'm going to make continuous playlist of this market profile as well as order profile as well as ODX as well. So if you combine all these three, then your trading setup going to be a robust trading setup. Now at any part of this video, if you like my efforts in explaining this video or making this video, then I want a single like and subscribe from you guys, because that motivates me and that also helps me to crack the YouTube algorithm to rank the videos, and that will help to me as well as this channel and our community. So this is one request. I ask you to subscribe to the channel and like the video. And if you have watched till now, in the next video we're going to cover the basics of market profile. From this video, every video is important. So see you in the next video in the market basics. Until then, this is Krishna signing off. Jai Hind.